What is going on, everybody? Welcome in to another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Wednesday, March 15th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful neighborhood, and wow, it's been a brutal day.
It's been a brutal day, but it's been a good day. Kind of a slow day, but also kind of not. We've got some interesting stories lined up. First one Stu's got for us in all capital letters: wave of new LNG export plants threaten to knock gas prices. I'd be okay with this. I mean, I can't lie and say I like high gas prices, even if that does help the oil and gas business, which it really doesn't. It's a common misconception that high gas prices actually help the oil business. I mean, yes, it usually means crude oil prices are high, but I'm okay with knocking gas prices down for the consumer because, as we'll cover in the CPI, it's a huge part of their overall budget. So Stu will dive in to all of these new export plants. Next up, we've got U.S. President proposes more money for offshore wind activities and no tax subsidies for oil and gas in 2024 budget. Done. So Stu will dive in to what this the 2024 Biden administration budget looks like, and as that title goes, it's not good for oil and gas. Next up, Stu's gonna fly us geopolitically around the world. We're gonna end up talking about the timeline of Iran and Saudi relations. He's gonna walk through this really good article and how the reestablishing of relations between Saudi Arabia and Iran has some pretty crazy geopolitical impacts. Stu will time it all. And then to follow up with that, China to host major Middle East summit after the success of the Iran-Saudi deal, building off what they helped broker in that article before. It'll be interesting. Stu will cover where this Middle East summit and what it looks like held by China. He'll kick it over to me. I'll cover what happened in the oil and gas markets. Oil didn't have a great day, specifically due to some of the CPI came out today, and amongst other things, specifically surrounding some of the banks. So I'll dive into why prices are down. And then we'll let you get on out of here and finish up your Wednesday. But before we do that, guys, as always, all of the articles that we're about to cover are available in the description below and courtesy of the world's greatest website, www.energynewsbeat.com, the best place for all of your oil and gas and energy news. Dashboard.energynewsbeat.com, the best place for all your data and finance. You can, again, hit the description below. All of the articles that we're about to cover are available there. I'm out of breath, though, Stu. Where do you want to begin?
Hey, let's start with the wave of new LNG export threatens to knock gas prices. This is really a very interesting article, Michael. It says one of the first quotes in here is, there's $1 trillion of natural gas infrastructure being built around the world today. There's a set of spectacular shifts in natural gas that is here to stay, said Jack Fusco, CEO of LNG exporter Cheniere Energy. We love a Cheniere. Qatar's got some big one. They've got a 49 MTPA by 2027, and U.S. projects could add 125 MTPA. That's 16.4 billion cubic feet per day. Here's the thing. You also have nuclear rebounding. You have Japan aims to boost its nuclear by 20%, and you need 7%. France is proposing to build 6 nuclear reactors. Problem with France is on their nuclear reactors and how this plays into that gas. Hang on here a sec. France is proposing to build 6 new ones because their repairs that they let go on 25 are too expensive now.
Okay.
Yeah, so now everybody is saying nuclear will take away from LNG because of nuclear power. We need all the energy we can get. So no matter how many nuclear reactors we can build, that will not impact natural gas or LNG. That's what I want to make clear. People are kind of throwing that around. And here's another one. They're only saying that it's till 2027, but it says big uncertainty in the industry is focused on how much damage the high price has done to medium term gas demand. But it also says in the long run, a little bit further down there, saying, oh, how much is going to go to renewable? How fast? I think you're 10 years away from being able to impact that. Thought it was pretty
I
interesting. What are your
I
thoughts?
agree. I think there's a little bit more bark than bite with this headline. I do think, with all of these projects coming online over this timeline, you're right. It's going to be a slow and steady drift. But again, we'll see that the market dynamics are bound to change between now and when this eventual $1 trillion projects roll online. So, I do think this headline can be a little misleading. But what would you expect from a headline that's in all caps, Stu?
I don't know, but I'm going to talk to the other team on that one. All right. Hey, Michael, let's try this next article here. Simon Black, unraveling can happen at an instant. And I thought this was interesting. The S&P fell roughly 50%. Unemployment soared and more than 100 banks failed over the subsequent 12 months. It was a total disaster. This is talking about 2008, September 14th, 2008, when hundreds of employees of the financial giant Lehman Brothers walked out of the bank's headquarters. Unbelievable. That was a tough time. Now, 15 years later, all these investigations, stress test rules, and it could happen again. Michael, do you know why this could happen again and it's a different circumstance?
Well, because this time it's not a crisis of over leveraged banks. I mean, it's a little bit of that. I mean, it's not a subprime mortgage crisis. It's a little bit more of a addiction to cheap money, which was handed via the low interest rates set by the Fed.
Exactly. But here's a twist that could, I'm pretending to be, I've got my hands here waving for our podcast listeners. It's going to be a little bit more technology than that in this article. Wells Fargo, government bonds are the new toxic securities, one of the big headlines in here, Michael. But what this really concern about SVB is the fact that banking has changed and people know things quickly. The run on this bank happened within hours. On SVB, everybody was saying, hey, wait a minute, get your stuff out. Banking happens on your phones. And that's one of the most critical pieces of banking in today versus 2008. Runs on banks can happen quickly. Now, the stress test on SVP did not happen because the stress test had another 50 million that they had to be on, or 20 million, whatever the number is, in order to do their stress test. So they were just big enough, but just under the regulations that were there for stress testing. Does that make sense?
Yes. And I think you also have to realize that, again, the game that they were playing was the Treasury security bond arbitrage, which as inflation and rates rise and your long-term government bonds rise, when customers come in to withdraw deposits, you have to sell those assets at a loss. They were sitting on an unrealized loss of $15 billion when their entire balance sheet only showed a profit of $13 billion. So that's where some of that stuff comes in. And then eventually you come into a cash crisis. So
let me ask this, and that is, in the article number 5, this is going to keep happening. When you take a look at your treasuries and you take a look at the management that you just described, what do you think is going to keep happening? Because the paradigm has changed. People do their banking on their hands. On their hands. Yeah, that's how I count. 1, 2, 3. You can tell I'm holding up my hands for our podcast listeners. But foreign bank, when you sit back and take a look at this, do you think that it's going to keep going on? Because I don't know that we're out of the woods yet. Do you?
Yeah, I think what's really going to happen is you're going to see a consolidation of banks. The regulations are going to get so strict. They're going to get so stringent that your local bank, your regional bank, they're not going to be able to supply. I mean, if the FDIC really does go in what everyone thinks they're going to do, which is basically guarantee all deposits anywhere,
Right.
they're going to have to increase the fees that banks pay in to the FDIC in order to have enough capital to supply that. Because now instead of having a 1% tax, it's probably going to need 5, 7. The only banks that can do that are the JP Morgans, the Citigroups. I mean, you're seeing articles. I saw tweets flying by and articles flying across the desk talking about how all three of those companies, Credit Suisse, JP Morgan Chase, and Citigroup, have all seen a huge influx of new accounts trying to be open and deposits because people just consider the biggest bank safe. And I mean, if that's what we all want, we want JP Morgan Chase to everyone just have a corporate account with them. Like, I guess, let's see. So
Brian Sullivan from CNBC had a nice tweet out there asking questions. And I do like Brian Sullivan. He is a good cat.
He's their commodities guy too, which I really like.
Oh, but he also knows energy. So enough of a shout out for him, because I do like him. I'd love to get him on the podcast, but we'll leave that alone.
Yeah. What do you got next?
Okay. Let's go up here. President proposes to find some ice cream. No, the title of the thing is U.S. President proposes more money for offshore wind activities and no tax subsidies for oil and gas in the 2024 budget. All right. This one chaps my chicken. And I'll tell you what, when you get a chapped chicken, it gets all kind of grumpy around here. Tax subsidies are not happening for the oil and gas. You and I have had this conversation before. Tax deductions for investing is not tax subsidies. Not subsidies. And that's what they're referring to in here. The FY 2024 budget is saying that there is $64.5 million for the renewable energy program of the Department of the Interior's Bureau of Ocean Energy Management, $21.6 million more than to 2023. That doesn't include the revenue from the leases. That does not include the revenue from the leases. So this is just absolutely bonkers. Listen to this one. It also proposes $92.8 million for BOEM's environmental programs, an increase of $10.4 million. This is like holding up things with a gigantic, anyway, I'm getting worked up on this. You can't print this kind of money without having low cost power being provided. This is going to just increase inflation. It's going to increase the cost to the consumer. Your thoughts?
Well, I think this quote that was in one of the fact sheets that the White House issued says it all. It says the president is committed to ending tens of billions of dollars of federal tax subsidies for oil and gas companies. Even as they benefit from billions of dollars in special tax breaks, oil companies have failed to invest in production. That tells you all you need to know about this current budget, Stu. That's what they really think about you. That's what they want you to think they think. Now, on one hand, they'll approve the Willow Project the day before they announce this. So it is the pot calling the kettle black? Don't worry. Yesterday, we just approved the Willow Project, which is 180,000 barrels a day in Alaska. I'm sure a couple deer might die. Newsflash. I'm sorry. There are trade-offs. As an economist, everything's a trade-off. Your iPhone, I'm probably someone jumped out of a sweatshop and committed suicide in the process of trying to get your phone made. I'm sorry. Tweet at me on the phone made by slaves and make fun of me. But so we could play this game all the way down the line. I think it's interesting that there is still 72.3 million committed for their conventional energy program, under which that federal agency is developing kind of a national oil and gas leasing program, which is going to be a little bit different than what the Bureau of Land Management does and what they do with these offshore oil and gas leases through the Department of Interior. So that I think is interesting. But I mean, it's filled with a lot of pork. What'd you expect? So I mean, this budget will never get passed. This is just their show and tell of, here's what we would like to have happen. It won't happen. So it's not going to, but it's to say, hey, here's what everyone wants to think we like.
Don't ever say in our political world right now, it will never happen. There's so many,
Okay.
there is so much bull hockey going on in Washington right now, whether you're Republican, Democrat, or
but it's just statistics. When's the last time a president has actually put together a budget? Was it Clinton? I mean, it goes back multiple presidents that haven't got their budgets approved. This isn't just a
Biden didn't put this together.
Well,
He,
the
thing.
I know. Okay, let's move on.
Yep. Let's go to the next one here. Timeline of Iran-Saudi relations. This is really critical because it goes right along with the next story, Michael. And the next story is China to host major Middle East summit after the success of Saudi-Iran. And let me go into this relationship. Back in 1979, that was before you were born, wasn't it?
It was.
Oh, shoes. Oh, my young apprentice. The Saudi monarchy, based on its legitimacy back then on Islam, it was really bad back then when you're talking about and at Oklahoma State when I was there. It was always the Iranians protesting the Shah, and it was bad on the campus. So I mean, it was just a whole nother thing. So then you take a look at coming around the corner in 1980 to 1988, Iraq invaded Iran, an 8-year war, and Saudi Arabia remained neutral. But it caused a real problem with the gas going on and the chemical weapons and all that kind of stuff. 1982, Saudi Arabia supplies Iraq with $1 billion in month in aid.
Ooh.
Rutro. So they even got on the other side. And it was partly because back then they had lobbed some chemical weapons over on that, and it was getting ugly on both sides. So Saudi was afraid they were next on the chemical weapons list. So 2001, I'm dropping down in here is the next one. Iran and Saudi sign a security pact agreement. Dude, this was like holy smokes. Now when you come down here, July 2015, Iran and the world's 6 major powers each reach a deal over Iran's controversial nuclear program. Saudi officials publicly endorsed the deal despite their past reservations. So it's kind of cool. They started coming around in 2015. And
it's a long article, man. They go through, this is detailed. They're talking about multiple quotes per month.
Oh, absolutely. But it was, you need to go read this to understand the whole process in order to understand how important China's brokering of this deal is, because the success of this deal is so good. You have, I think 60% of all the countries in the Middle East are going to China to go to this summit. So China can broker deals. I'm serious. When was the last time that deals were brokered in the Middle East in order to make peace?
It hasn't been in my lifetime.
It was under the Trump administration, the Abraham Accord. And then that was the first time that they started
Okay, you're right. I forgot about the Abraham Accords.
many, many years. That is a triumph. And then Biden administration comes in and it goes whoop, off and gone. China comes in because this is all a slap in the face to the Biden administration. So we're going to go ahead and table the rest of the article on China because I got a bunch more stuff coming up on this. And it's using its economic ties to influence Iran's behavior. China understands the way to Iran's heart is through money. They need it badly right now.
Yep. And I think this later on down in this article, it says Saudi officials hopes that Beijing can use its economic ties to influence Iran's behavior as China remains the biggest importer of Iranian crude. The who buy oil gain the power.
And they are also, this is what all this article means. Both these articles means it's going to speed up the getting rid of the petrodollar. The United States dollar is going to move away, not be the world standard even faster now. Anyway, that's it for my side. Off to you.
Nice. Yeah. Absolutely. No, I mean, for having no news today, there was a lot of news, people. So we appreciate with Stu keeping us up on all things geopolitical related. Very interesting day for the markets, really soaking in the aftermath of the SVB bank collapse. And kind of the fallout from that. Bank stocks were down, but we actually saw the S&P 500 rally up 1.6 percentage point. NASDAQ actually jumped 2.3 percentage points. Facebook came out and said they're going to lay off 10,000 people and eliminate 5,000 job openings. So even after laying off last quarter, Mark Zuckerberg comes in, lays more people off, still doesn't deter tech stocks. Bank stocks all around were down. We did see funds become available both at SVB and at Signature Bank. Charles Schwab was down fairly heavy. There was a couple other local regional banks that were down, but really that had an impact on oil currently trading as we record this about 7:08 here on the 14th, 71.80. Again, a lot of that's due to the uncertainty surrounding what that crude oil demand might look like both home and at China. But again, today, the big reason why is our dollar was down, interest rates up with the fact that we're entering a peril in which the Fed has come out and already said we're going to continue to raise rates. And if continuing to raise rates will hurt and cause banks to continue to fail, it's a sick cycle that the Fed started. And in order to correct, they have to make banks fail. I mean, it's really a sick cycle that has to happen. They created a problem, and in order to fix the problem, they have to wipe out companies who took advantage of the policy that they created in the first place.
And it's because they took too long to take any action, I'm going to call it stupid.
Yeah. So, and right now that'll hamper oil prices. I think, in the short term, do I think we stay above 70? Man, I hope so. But could I see a dip below 70?
Can I interject here? I did see on MSN on Squawk Box this morning the CEO of Delta, and he is a sharp cookie. I'm not a Delta fan, but on the other hand, he is extremely sharp. And he did say that they had their largest sale or second largest day of sales in last week. And with that, he said what they're seeing is the consultants are hitting the road again, and people are really traveling, and they're expecting their volumes to go up. And when they asked him then about that, I did not know that Delta owned their own refinery. And I was like, wow, that's pretty smart. He says that helps us out. But if that is systemic of lots of demand, that may help us.
Let's see, because I don't know if I believe that. Delta bought Pennsylvania oil refinery 10 years ago in order to save money on jet fuel costs. Wow, they did. That's interesting.
Yeah, thanks a lot, Michael.
I believe you. I don't believe that. I believe that guy said that. Do I believe that what that guy was saying was true? Maybe, maybe not.
Well, the CEO of a company.
You're right. You're right. CEOs never lie. CEOs never come out and say things that are false in public. You're right, Stu. I'm the idiot.
Yes, you are.
Natural gas prices, nothing. Before I jump, guys, API, as you listen to this on Wednesday, we'll know the crude oil inventory. That comes out 10 a.m. Or 9:30 Central Time, 8:30 Mountain, 10:30 if you 10:30 if you are in Eastern Time Zone. API though dropped yesterday, 1.1 million or 1.15 million barrel build. So we'll look to see if the EIA crude oil draw confirms or denies that. So that's again going to factor and weigh on the bear side. Natural gas, again, weather on the horizon is really the only thing drawing it right now. We did see a little bit of a steadiness, $2.58. Really not much on that side. Again, as weather goes, so will that index. So I don't think there's much point spending time on it. Stu, you got anything else for these guys?
No, it's going to be a beautiful day in the neighborhood tomorrow.
Yes, it will. So with that, guys, we'll let you get out of here. Finish up your day. We appreciate you guys checking us out here at the Energy Newsbeat Daily. Stand up for Stuart Turley. I'm Michael Tanner. We'll see you tomorrow.